Well, good afternoon, then everyone, as we approach the end of another week of trading. Friday, 1st of September, so into a new month. Finished off the month of August over the course of this week, and a pretty positive end to the month for stock markets. But we'll jump over to some charts in a minute. We will start with the economic calendar. Positive week of the stock markets off the back of a raft of weak economic data from the US. We started off with JOLTS job openings on Tuesday. Consensus 9.4 million, actual 8.8 million. So a lot less jobs available for people in the US. Obviously shows companies' reluctance to continue hiring as we are in a period of extremely high interest rates. You can see GDP figures on Wednesday, 1:30 p.m. on Wednesday. Consensus 2.4%, actual 2.1%, which is still strong growth over the second quarter, but lower than what markets had anticipated. We come into inflation yesterday in 0.2% in terms of core PCE. Now, core PCE figure is the Fed's preferred metric of inflation, so the fact that is now sitting or continuing to sit at a more manageable rate of 0.2% is positive in terms of getting inflation under control. It is not rising, certainly at the pace that it had risen. Oops, I clicked the wrong button. It's not rising at the pace that it had done previously. So 0.2% multiplied by 12 is obviously 2.4%, which may be still slightly higher, but obviously it goes in 0.1, 0.2. So in line with what the Fed would hope for. Personal income, personal spending, personal income slightly lower, personal spending slightly higher, so not much to see there. But we come into NFP today, where the headline figure for non-farm payrolls has come in slightly higher than anticipated, but markets have jumped at the unemployment rate, rising unexpectedly 0.3%. You can see consensus 3.5%, actual 3.8%. So a sizable jump in the unemployment rate. A number of weak jobs prints over the course of this week in terms of the job openings. With ADP employment on Wednesday, which was also negative. Comes into the unemployment rate today. That is slightly lower as well. We had wage growth figures also slightly lower in terms of the medium impact releases over the course of this week. Inflation slightly higher in Germany, also slightly higher in Europe than markets had anticipated. That really hasn't had too much of an impact on markets, as there was some comments from some ECB members seemingly reluctant to suggest interest rate hikes are coming at their next meeting. So apart from that, we've had slightly positive data from China over the last couple of days. This manufacturing PMI, albeit still below 50, slightly above consensus, which is okay, but this manufacturing PMI this morning above 50 and above consensus. So a bit of positivity for stocks off the back of that, a bit of positivity for stocks off the back of some weak economic data, reducing the need for the Fed to continue hiking interest rates. And as you can see across here, S&P, the Dow lagging a little bit, but certainly the S&P, the Nasdaq rallying hard over the course of this week. Couple that with the Russell and the Dow Jones also making their way higher. They were followed by the DAX over Monday and Tuesday, the Euro stocks over Monday and Tuesday. But once those stronger than anticipated inflation figures started to come in, the DAX and the Euro stocks have somewhat been left behind. FTSE back end of last week did rally higher, obviously a bank holiday on Monday in the UK, so slightly shortened week of trading. FTSE pretty flat on the week once we end, although still moderately higher. The VIX continues to trend lower, so that continues to be a positive for stocks. So a bunch of negative US data reduces the need for the Fed to continue hiking interest rates. The VIX continues to push lower, all of which supportive for stocks. The US dollar has had a bit of a negative week due to close down on the week against the majority of these currencies. You can see Aussie, Kiwi, Euro and Sterling all pushing higher over the course of the week, but US dollar not pushing lower at the same speed that stocks have. We look at dollar, Swiss dollar, CAD, dollar yen. Dollar yen had a solid bit of downside off the back of these, off the back of this unemployment rate, as you can see there. Most of these had a spike or a dollar spike lower across the board, but dollar yen is the most pronounced. Obviously, yields have had a slight push to the downside as well, as you can see, which is a contributing factor to some Japanese yen upside versus the US dollar. Now, the big mover of the week has been oil. Oil has continued higher. Now, you've got hurricanes in Florida, over the sort of the east side of the Gulf Coast over in America, which has potential to shut some oil refineries. Couple that with Russia and Saudi Arabia's ongoing cuts to production, couple that with oil inventories on Wednesday massively lower, a draw of minus 10.5 million barrels of oil. So minus 6 million last week, consensus was for minus 3, but minus 10.5 million barrels gone from US inventory. So tight supply, numerous different reasons. So oil continues to truck higher, continues to trend higher. Oil higher was the trade of the week. CAD yen, solid downside off the back of some negative Canadian GDP figures. Now, negative Canadian GDP figures it's flat but negative in terms of consensus, but 0% growth over Q2. Maybe be heading towards a recession in Canada. That certainly means no more interest rate hikes. If they do enter a recession, you will probably get to a point where some interest rate cuts are needed from Canada. So negativity across the board in the Canadian dollar, US dollar negative across the board this week. Oil, main driver of upside, or oil the main mover in terms of upside this week, or main mover in terms of any direction this week. But stocks higher, oil higher to end the week, and unemployment rate ticking up like that probably somewhat, but does definitely reduce the need for interest rate hikes to continue. Stocks continue to trade at the highs post, or back trading at the highs post unemployment rate. It'd be interesting to see, do they break the fresh highs? Definitely a bit of positivity in stocks. Is there a need for the Fed to hike interest rates again? Hazard a guess, judging by this week, probably not.